Yeah, good morning, everyone. Uh, so last 2 days we are seeing uh, quite high volatility in the US market and divergence also, wherein we are seeing Dow is moving up in last 2 days rapidly and making new highs. In last 2 days, Dow is up by almost around 2%, whereas on the other hand, the S&P 500 has declined, and it has declined so much yesterday that it has broken the low of Tuesday. So extreme wild move in different stocks. Specifically, the decline was led by IT stocks, and this is all driven by comment from the Trump, which is now people are expecting him to be next president, and that is driving the market based on his statements, wherein he has indicated that there will be restrictions on China import, and also he may not be supporting military activities in even if in Taiwan if any problem comes, and also quite possible that the uh, support to the war in Ukraine and Russia may be lowered or withdrawn. So all these are putting up different type of speculations, and markets are moving in that direction. Uh, Apart from that, we are seeing weakness in commodity as well, wherein though the oil is up by around 1%. If we talk about aluminum, from the close of the equity market on Tuesday in India to now, the LME is down by around 2%. And also the other today morning, iron ore is down by around 2%. Steel is down by around 1%. This is all ahead of what China will be coming up with the statement post their 2 decade, once in 2 decade conclave, which is likely to complete today, and will be publishing some statement today for what they want in coming long-term policy, what they are thinking. So this is likely to have an influence on the equity market as on the commodity as well. So a lot of volatility, which is been visible across the world. Most of the Asian markets are under pressure today. So we may find some profit booking in India as well. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. So today we expect flattish note open and remain a range found during the day. See next important resistance facing for Nifty 24,670 and 700 in an upside. Downside first major support place around 24,540 and 24,470. If Nifty break this 24,514 intraday, and then we expect further pressure. Otherwise, Nifty trading within the range that's 24,540 and upside 24,670. Bank Nifty also showing some resistance in upside that 250 to 670. I break this range, then we expect further rally towards 53,000, and downside 52,400 is a major support for Bank Nifty. Pin Nifty also trading the upper range, and first immediate resistance place around 23,720 and 23,780, and first major support place around 23,650. So all three index trading in upper range. Any chance is break first immediate major support, then we expect some pressure in all three index. Stock specific, Apollo Tyre looks positive at current level. Godrej Property also given a good rally in last trading session, and this momentum to be continued to this session. Negative side, Havels and Indian Hotels looks weak. We saw some pressure in last two trading session. These two stock in negative side, Havels and Indian Hotel. That's it for technical derivative I can carry.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you're seeing that from last 2 day of trading session on the closing basis, we are seeing that the pressure is being witnessed from the index front. Currently, if you look at the overall Y position from the change front also, on the weekly basis from 24 600 and 500 level, we are seeing that the put trader positions are getting added on, but on the upside again 24 700 and 800, we are seeing that the call trader positions are also getting added up. So on the weekly basis, the range for the Nifty currently will be 24 500 to 24 800 level. Nifty is likely to remain in this range. If 24 500 level gets broken out, then we will see major profit booking on short fresh short position in the market towards the 24 200 to 24,000 marker. So currently we should hold the long position with the support of 24 500 level. On the monthly basis also, we are seeing that 24 500 is acting as an immediate support. Below that, directly 24,000 level is acting near the support level, where we are seeing almost 18 million position of put right are getting holded on or at 24,000 strikers. So view seems to be on the flattish note to a range bound front till the time the range of this 300 points is not getting broken out. PCR on Tuesday session closed on a positive note, means above the resistance zone of 1.25 level. So this is a positive side from the PCR front. PCR is having a support on the downside for this July series will be at 1.08 level. Currently it's trading at 1.25 level. So 1.08 will act as an important support with that. If at that point of time, if Nifty goes below 24 500 level and PCR at that time goes below 1.08 level, then fresh new short position can be created at that point of time. But currently there is not still confirmation for new short position to be added on in the index front. While on the stock specific front and the sector specific front, FMCG sector looks positive. Selective counter from the FMCG will be Marico. Dabur looks positive. One of the counter that looks positive in today's session will be IGL and Indus Towers. 4 to 5 counter looks positive in today's trading session. So that's it from the derivative front. Thank you.
Good morning. L&T Finance result is marginally above expectation due to lower than expected provisions. Loan book came at 88,700 crores, up 4% sequentially and 13% year-on-year. Year-on-year growth has reached 4-year highs on the back of a reducing mix of wholesale loans, which now stands at just 5% of total loans. So we think that going ahead, this loan growth on a YOY basis will further accelerate as the retail mix is more than 95% now. Profit was 4% above estimates and increased by 24% sequentially and 29% year-on-year due to muted OPEX growth. Asset quality was stable with GNPA and NPA remaining at 3.1% and 0.8%. We remain positive on L&T Finance. HDFC AMC result is in line with expectation. AUM grew by 9.6% sequentially versus industry growth of 9.1%. So company increased its market share by 10 basis points. This is the second quarter in a row where we have seen the increase in market share. Revenue grew by 11% sequentially, while profits grew by 12%. So both of them have grown slightly ahead of AUM growth, as the share of equity AUM continued to increase by 120 basis points on a sequential basis. And currently equity mix in total AUM is at 61%. For comparison sake, last year same quarter it was at 51%. We think HDFC AMC will continue to outperform, and we are positive on it. HDFC Life Insurance result is in line with expectation. APE grew by 6% YOY, while VNB grew by 18% YOY on the back of improvement in VNB margins to 29% against last year's 26%. Stock is trading at 2.8 times market cap to EV. We are positive from long-term perspective. Elecon Engineering result is declining. Revenue was down 5% on a YOY basis. Revenue from gear division was impacted on account of weakness in order inflows. Management said this was mainly because of elections, and it expects that the 9-month period will recoup all the losses that it has seen on the revenue side in Q1 in the remaining 9 months. Company has maintained the yearly guidance of 15% growth in top line. Margins were stable at 23.5%, while profit was flattish on YOY basis. We are neutral on Elecon Engineering. Thank you.
Good morning. Jubilant Ingrevia posted the results which were improved. Revenue has degrew by 4.7% on a YY basis. However, the company has seen the volume growth on a YY basis, which was similar to Q4 performance. During the quarter, prices were lower due to excess supply from the China that has put pressure on the prices. In terms of profitability, EBITDA margin was stable at 10.7%. And on a sequential basis, it has improved. The improvement was on account of volume growth in key specialty products and cost initiatives that has undertaken since the last 3 quarters. It expects overall rupees 120 to 125 crore of cost savings on an annualized basis on account of all these initiatives. In terms of management guidance, over the next 5 years, the company is expecting to achieve the revenue of rupees 12 to 13,000 crore with the EBITDA margin in the range of 20 to 25%. In terms of segments, EBITDA margin guidance is expected in 5 years. That is for specialty chemicals. It is in the range of 23 to 25%. In the segment nutrition, it is 17 to 18%, and acetyl it is 10 to 12%. The key highlight from the con call is that an agrochemical opportunity in CDMO space is in advanced stage, and further 5 to 6 opportunities are expected to materialize over the next 1 to 1.5 years, where the company is in discussion with the 4 to 5 major innovators. In addition to this, they are also expecting some opportunities from the pharma side. The stock is currently trading at a PE of 29.2 times to FY25 EPS, and our outlook is positive. Asian Paints also posted the results. Results were below expectations. In terms of volume, the volume growth came at 7% versus the expectation of 8.2%. Overall revenue degrew by 2.3% on a YY basis. The management has highlighted that the demand conditions for the paint industry were tough due to severe heat wave and the general elections in the Q1. And there was impact in the decorative segment. It has seen the positive movement in the rural markets, and the company's EBITDA margin is reported at 18.9% versus the expectation of 21.1%. The stock is trading at a PE of 53.4 times to FY25 EPS, and we are neutral on the stock. Thank you.
Good morning. LTI Mindtree reported its numbers, which were ahead of expectations. The CC revenue growth came in at 2.6% quarter on quarter against the expectation of 1.6%. EBIT margins at 15% were in line with expectations. In the con call, management has reiterated that the macro demand environment is unchanged, but short-sighted demand is coming back and are seeing some green shoots of recovery. However, the order intake for the company has remained constant at $1.4 billion in the past several quarters. Margins for the company also may remain stable for now and may not see any acceleration very soon. With traction in revenue growth, company has guided for significant hiring for the next quarter, and even quarter two would see a good growth momentum as indicated by the management. The stock is available at 28 times FY26 expected earnings, and our outlook is positive for long term. Secondly, today, a couple of more IT companies will report their numbers like Infosys, Persistent, Mastech, and other mid caps. Infosys is expected to report a CC revenue growth of 2.4% sequentially on the back of ramp up of large deals won in FY24. And EBIT margins are also expected to expand by around 60 beeps at 20.7%. Stock has moved up around 15% recently, and one should take calculated risks in near term. Thank you.
Good morning. Bajaj Auto result is in line with expectations. Revenue from operations grew by 4% QOQ and 16% YOY. EBITDA grew by 5% QOQ and 23% YOY. PAT is in line with expectations. Company's revenue growth was driven by both domestic and export sales, with spare parts sales contributing 11% of revenue, EV contributing 14% of overall revenue. Increase in commodity cost, particularly aluminum and copper, will have some impact on margin. The company is targeting mileage conscious customers in the 100 to 125cc segment because 75% of motorcycles uh, sold per month in India are in this segment. There is growth in the 150 to 250cc category due to the new product and market dynamics. The premium category in the 250cc to 500cc segment is underperforming. The launch of the new Chetak 2901 will target the sub 1 lakh segment, enabling wider distribution and market share growth. The electric three-wheeler market share increased by 26%, up 9% from the previous quarter, expanding to over 140 locations from 70 locations in quarter one. The company expects to spend between 700 to 800 crores for a new electric three-wheeler facility and other capabilities. So our outlook for Bajaj Auto is long-term positive. Thank you.
Yeah, a small news on Hindustan Oil Explorations. In fact, they have a field, oil and gas field in Dirok, Assam, and there they got one more discovery unveiled in Dirok 1. So there the expectation is that they will be producing around 6 million standard cubic meter per day of production of gas. Right now, they are producing around 25 CFD from the Dirok field. But the utilization, they can produce up to 45-50 CFD, but because of the lower demand in that particular market and the problem of logistic, the production currently is running at around 24-25 CFD. Though the logistic is getting improved, but it may take some time, maybe another 6 months to 1 year. Once the logistic get approved, then the production which is happening right now will also increase, and also this will add up to the overall reserve and the future production as well. So long-term positive, near-term may not have major impact on the financials. Anyhow, the holding of the operating interest in the field is at 26.9% for HOEC. So marginal positive for HOEC. So that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold is expected to test 74, 450 to 500 levels. If prices sustains below 74, 750, then we might see some correction. Uh, Correction till 74,000 to 73,900. So one can initiate a buy around 73,900. And for trading purpose, one can take a risk with a stop loss of 74 750. If prices sustains to cross 74 750 levels, then we might see some correction. And one can also buy around 73 900 as mentioned. Silver, we are expecting prices to test 90 to 700, whereby some selling pressure could be witnessed. So sell with a stop loss of 93 500. On downside, it can test 92 92,000, 91 500. Cautious below 91 500, whereby again selling pressure could be witnessed further. In metals, copper continuously drifting down after breaching the 850 support zone. So it can test 835. A caution sign below 835, because if prices sustains below and close below 735, then we might see further correction in prices. So there could be some pullback till 845, 847, whereby be witnessed. So for trading purpose, one can initiate a sell around 847 with a stop loss of 852. In crude oil, prices are expected to test uh, 7,000, 7,030 on the higher end. So buying on dips is recommended around 6,900 with a stop loss of 6930, 6830. And in natural gas, continuous prices are drifting down, and we might see prices testing 165. So selling on rise around 164. That's it from us. Thank you very much.